Hey Rebels, welcome back to the channel, your home in No BS Trading. Today I'm going to talk about three brutal truths that you must understand if you want to be a consistently profitable trader. There's a lot of things about trading that really suck that nobody really wants to talk about, but it's going to be essential if you want to make money in these markets. So if that sounds good, like and subscribe. We're going to dive right into these truths as well as do our typical weekly analysis. So right off the bat, no one knows the future. No one knows the future. I can guarantee you no one knows the future. A lot of people like to come on here and present themselves as if they know exactly what's going to happen and they know every little market movement. It's just not true, and you're going to want to fade that as much as possible. There's a lot of very good traders out there. There's a lot of very good content out there, but any of the great traders that are consistently profitable that I've ever found will tell you that what nobody knows what goes on the right hand side of the chart. So if you want to be consistently profitable, you basically have to just get that out of your head, get that in your head as soon as possible. That nobody knows the future, okay? And that's okay. We're going to learn how to read the tape and read the markets as they come in real time. So the other brutal truth that I'm going to tell you right now is that you're late. You're late to this cycle, and I'm going to showcase that right now. This right here is a monthly chart of Bitcoin on a logarithmic scale showing that Bitcoin over time. And what I have highlighted here are the bear markets here, and in between are the bull markets. And you can see that typically, excluding the Genesis cycle because it's a little weird, 35, 34, months of a bull cycle, basically. So you can see right here, I basically just highlighted what we would typically see. It does not mean that it cannot extend beyond this, but you can just see that we are so well and truly into this bull market. People keep talking about like the bull market that's coming, the bull market, when we get a bull market, when we get a bull market. We've been in a bull market since January of 2003. I'm sorry to tell you, it just is the way. That does not mean that there's not any more opportunity. And that's what we're going to get into there. I think there's plenty of opportunity left in this cycle, but it is going to be more emotionally volatile because the markets are going to be more volatile in general. So nobody knows what the future is, but if our thesis is correct that we're going to see an altcoin season, it is a very brief window at the very end of the cycle. So Bitcoin has been in a bull market since January of 2023. Anybody else who says otherwise and says that we're waiting for a bull market clearly does not quite understand the principles of the markets. So the other thing that is unfortunate is that confirmation comes at a cost. And we're going to talk about confirmation in both directions, both to the upside and the downside as we walk through our analysis. But confirmation, what you're looking for, does come at a cost. Okay, so why don't we talk about to the upside? So for us, we have this inverse head and shoulders pattern as well as this fourth time breakout, which I've talked about many times on the channel. And if we're waiting for confirmation to the upside, what I would like to see in my analysis is multiple weekly closes above that line. That's check, number one. And then I want to see higher lows form at least above the horizontal, right? Which would be, somewhere in this level. You bring that up here possibly, but we want to see higher lows form above this line in general. And what that means is that that comes at the cost of lower prices. You're going to have to stomach lower prices because the market needs to come down to form a higher low and then a higher high. But that will come at the cost of lower prices. So you're going to have to stomach that. So confirmation is not always an easy ride. Okay. And then I guess since I have it on this scale as well, unfortunately, the same can be said for confirmation to the downside as far as waiting for the bull market to be over comes at the cost of lower prices. And I'm going to go to my settings really quick and turn off this extra tool that I have on here and just do the 50% level. Now, what we can see here is we have our 50% level sitting down here at around $70,000. So confirmation to the downside or invalidation that the bull market is over is effectively we're going to have to break this $74,000 levels and form lower highs beneath this level, beneath the previous cycle peak, right? Now that is not an easy thing to stomach, absolutely, but it's just the way that it is. So the sooner that you can recognize that sometimes confirmation just comes at the cost of lower prices or higher prices, however it is, the better off you're going to be because nobody knows what's happening in the future. And if we're trying to read the markets in real time for strength and weakness, there are going to be multiple signs leading into that confirmation that things are slowing down. And that does not mean that you want to wait until this level to sell, but we probably won't truly know that until that comes about. And now let me just draw this up on the previous cycle, just so we kind of have a reference here. If we go from the low to the high here, you can see that we weren't really confirmed that we were in a bear market until we had basically a lower high, a lower high beneath this level and a break. And by that point, we were almost over with the bull market, or with the bear market. So like I said, there are several indicators in between, and you can shorten up your time frames for sure to give yourself closer validations. We don't necessarily have to wait for those prices, but we could see on a shorter scale that if we have a break of this here, that could be our first signal. It does not necessarily have to come from the lower prices, but the whole cycle, really, yeah, that's the line in the sand. Anything above this is technically strong, but to get the earlier indication, your 50% levels here. So that puts us all the way down almost at 100,000. So there's a long way to the downside. Like I said, you don't have to do the full range of the cycle. But I was just kind of giving that for reference that technically in this whole cycle, anything above that level would be considered strong territory, and it does not mean that it's over. So I use these 50% tools a lot for strength and weakness. Line in the sand for me would be closes and lower highs beneath this 98,000 level, okay? I'm going to bring the chart to this trend line that we've been talking on the channel pretty much ad nauseum, where we've been getting rejected time and time again, and we finally broke through that trend line and had a few weekly closes above. That was the first sign of confirmation. What I'd like to see is some higher lows above this trend line. Now, it doesn't always happen as cleanly because we have this trend line as well that seems like we're coming down to retest, as well as that head and shoulders pattern that it looks like we're coming down to retest as well. So none of this is exactly cut and dry, but you can just see what I'm saying, that the confirmation comes at the cost of lower prices, okay? And nobody really knows what's going to happen next in these markets, and people will try to predict time and time again the exact movement of the market. It's a very dangerous thing to do. If your thesis is that we're in a bull market and that the tide is rising, great, but you don't know what every single wave is gonna every single wave that's going to happen in the tide rising. Okay, trying to predict every little market movement on the way is a very dangerous game to play, which sounds kind of counterintuitive because trading is effectively trying to predict market direction, right? So those are some brutal truths, honestly, that kind of suck about trading. Trading kind of sucks because you just don't know. And you have to basically form a thesis based on what the market is telling you at any given time, and then give yourself invalidation levels, right? So I use these 50% tools quite a bit to give myself invalidation levels for this whole structure right here, from the low to the high. For me, breaking below this trend line and forming lower highs would be the first indication that we're at least slowing down. And then I would say my personal own thesis, I believe, gets invalidated once we break this particular level and form multiple closes and lower highs, probably on a weekly time frame, because this is a weekly chart. That would tell me that I probably don't want to be getting long, especially since we are so far along in the cycle. So hopefully that kind of wrapped that up and was useful to you. Knowing these truths ahead of time, these aren't bad things. These are great things to know and understand, and just basically get used to it, because there's a lot of people that are going to try to tell you exactly what's going to happen in this market, and they're going to sound very convincing, and you're going to try to follow them and follow their trades, and you're going to get wrecked because you're not going to have the same conviction that they do, and they're going to get out of their trades whenever the hell they have their own invalidations, and they're probably not going to tell you about it. They're just going to go quiet. They're going to come out and they're going to tell you that we're going to see higher prices forever and ever, and then when we don't see that, you're just not going to hear from them. They're just going to go silent. Okay, so either way, let's go to the analysis portion, and I'm going to keep this relatively sweet because last week we were talking about multiple weekly closes above this trend line. I do like to see. I don't like a weekly close below this trend line, but as I've stated before, confirmation to higher prices may come at the cost of lower prices in the shorter term, okay? So I have this trend line here, and if we just go from point to point, we can see that we just came down just to touch it. I mean, on the dots. We'll have to see how we react to this in the coming weeks and months, okay? That's the other thing. Confirmation is going to take time. We can't tell right now. We're taking this 1 week at a time as far as the weekly analysis goes. And as far as the weekly analysis goes, we're in strong territory basically across the board, minus this one trend line, okay? The other thing that I've been talking about many, many times is this momentum line from the previous move from the low to the high. Take that and project that off the low. It's very, very similar. It's a very similar trajectory to the trend line that we already have here. Okay, so if we were starting to see multiple closes and lower highs beneath this, I'm not calling that as the end of the cycle, but we're definitely on high alert, okay? Because we are so late in the cycle, we really have to pay attention to how this actually reacts. Everybody right now is anticipating higher prices. And in fact, I am actually also anticipating higher prices. We don't see any of the sentiment readings that we would see at a top of a bull market, which is what gives me higher confidence that we're not there yet. We just have to read it as we come. We like the sentiment right now is very bearish, very, very bearish, and we're pretty much in all-time territory. That doesn't happen almost in any market across the board, whether it's copper, oil, NASDAQ, Apple, any market does not end on fear. I think that we're kind of in more of a disbelief phase right now, and the euphoria phase is coming. Okay, that's what I'm anticipating. But again, have your confirmation and validation levels for your own thesis so that you don't get caught on the wrong side, so that you can put your stop losses and cut your losses before you end up just trying to hold on for the entire ride. Because if you got really excited around here and you just held and held and held, it's not a fun ride. This was an entire year of a bear market and then another, couple years before we really started to, even get back to break even, right? So one thing to note is that we do have 1 weekly close below this trend line, but we're in very strong territory. So that's what I like to see. Something else that I have here is just a forward projection tool, and I've taken out the bear market years, but you can find these forward returns in several locations. Just look it up online, basically. But what I have here is for August, not really looking too good as far as being a positive month. Doesn't mean that it can't be positive. Doesn't mean that we have to go, be a very super negative month. We could be down by 1%, and that would still be a negative month, right? We're just talking about closing prices. But as far as the months go, August is probably looking the worst as far as positive returns. So this slowdown isn't necessarily surprising, okay? Because we have history to go by, and we can take a look that August typically not looking the best. And I don't have my cycle charts in front of me, but there are different cycles that you can track, and often markets will follow very similar cycles. Whether you look back 5 years or 10 years or 60 years, a lot of times the market will have a very similar shape to several different cycles, decade cycles we call them. And I don't have that in front of me now, but I'll probably go in different videos. But I'll just tell you right now, I'll cut to the chase, that we do see a kind of a slowdown in August in a lot of those models. That has happened time and time again. A lot of times markets will have very similar shapes to the years before, and we are seeing kind of a slowdown or sideways consolidation, or even a drawdown into August, September area, and then finishing the year stronger. So that's the hope even there, is that if you just go back and we look at the cycles and we look at what has happened in the past, it gives us some indication of what markets typically do and what they like to do at any given time. And there is seasonality to markets. That actually goes back to the days of harvest time and things like that. Like, it's kind of a cyclical nature there as well. So summertime typically a slowdown, but you can see that here in quarter four we have a little bit higher hit rates, as far as, it's more than a coin toss. When we get into quarter four, typically quarter four is higher performing as far as Bitcoin itself goes. Okay, so that's what I like to see. I'm going to dive quickly into the liquidation heat map. It looks like we've swept a lot of liquidity. I've talked about that several times on the channel, so I won't go into it too much, but we like to look at liquidity. And when liquidity gets swept, there's not a lot of liquidity down here for market makers to try to go and snag. And so to me, I'm not trying to call the low. It's very dangerous to try to call the low and call the high, but we have swept a lot of liquidity, and I would say that this whole move has shaken a lot of people out of their positions. So it's not going to surprise me if, like, we've come down, we're just coming down for a retest, and we see a positive momentum from this area. Not going to surprise me to see continued prices, but we do have to keep in mind the seasonality and the August timeframes typically slow down the cycles as well, kind of showing a sideways consolidation, possibly a correction into August and September, that's the whole point. There's a lot of data out there, and you have to be prepared for each one of those eventualities in your own plan. You must make your own plan, or you're not going to be profitable in any market ever. Okay. All right, so I'm going to go back to the SUI chart, because we talked about this a little bit last week. And again, same thing with confirmation. All we had is 1 weekly close above this level. I mean, that was looking strong, looking convincing. I said you have a higher probability of success if you wait for this to break trend and come down for a retest. Sometimes there's a little nuance, because we may go a little bit lower and not test the trend line completely. But again, if we just pop up our 50% levels, from the low to the high right here, still in strong territory. And we'll have to see how it reacts to this chart. So basically what I'm doing is I'm considering the next month as a possible buy the dip opportunity, but we need to keep the invalidations in mind. For me, my stop losses would be basically below the April lows. To me, that's the structural low of the whole market. Going back to Bitcoin, same thing right here, April lows. That really invalidates things for me. So that's a long way to go. It's a long way to go, but at the same time, it gives the market room to breathe, so to speak. So pretty much think that wraps this up. That's the thing that sucks about trading is there's no clear answer and nobody can tell you exactly what's going to happen in the future. But if you learn to read the market as it is in terms of strength and weakness, then I think you have a much better chance of being profitable consistently. Because you might have a great trade and you might have got in one time really well, but if you don't sell and you don't realize those profits, again, it's hard to buy in these areas because there's a lot of fear. It's a lot easier to buy in these areas because at least up at the very tops, or maybe these tops here or these tops here, it's a lot easier to buy in those areas because there's confidence in the market and you can see the previous history. The most immediate history is showing you that prices are going higher. It's hard to buy here. It's hard to actually buy low because we've been going down for a period of time, but you can see that typically that is a better risk to reward as far as an entry goes. Okay, so anyway, hopefully that was helpful. We're going to have to take this 1 week at a time, 1 month at a time. We are nearing the end of the cycle, but I think there's lots of opportunity left. And so we're going to have to be engaged in the markets every single day. I do, at this point, only do weekly analysis, which I think is fine because we kind of want to just zoom out on the charts and just get an idea of what's happening in the background because there's a lot of noise in the daily charts and we don't necessarily want to be caught up. We can just come here and put a few basic trend lines, a few basic tools to kind of get us an idea of strength and weakness, not trying to predict the direction of the market, and that's going to keep us on the right side of the trend. Okay. All right. Hope that helps. Later, guys.